The Bank of Canada is going to move higher this week. On September the 7th, they're expected to come out with a 75 basis point hike, and that is pretty much agreed upon throughout the whole market. Now, that is not the most important part, and I think what a lot of people are questioning is, yes, we know we're going to probably get to 3.25% on the overnight rate, but just how high are we going to go? I know we've touched on this topic many times before, but with all the fresh data sets coming out, I figured we'd go through it again to try and figure out just how high interest rates will go. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, I have a huge favor, a huge ask. If you learn something new or you get some value out of the video, hit that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting the subscribe button, turning the notification bell on for similar content just like this. We do this every single Sunday, so make sure to come back to the channel to check it out. So we had some big news this week. We've had some great news in the sense that inflation is on its way down, but we've also had a softening in the GDP numbers. We've also seen housing fall somewhat off of a cliff, coming back down to pre-pandemic levels. But we're going to talk right now about the interest rate decision that is expected this Wednesday, September the 7th. The Bank of Canada is expected to push interest rates into restrictive territory. Now, I know it's something we talk about a lot, the neutral range. That is between 2 to 3% on the overnight rate. And Tiff Macklem has not been shy to say he is going just above neutral. So that's why the market's thinking that they're going to go 75 basis points from 2.5 now all the way up to 3.25 as of Wednesday. I think it's also important to note that the neutral range has declined over the past 20 years. So that number seems to be getting lower and lower and lower. And I think that's reflective in what our interest rates have been. So we mentioned it before, there is an expectation that they are going to move this high, getting them to about 3.25. This would be the fourth oversized rate this year and capping a 300 basis points tightening since March. It was only a short while ago that our overnight rate was at a quarter point. Now it is expected on Wednesday to be at 3.25. It's absolutely crazy. But what is some of the experts saying just based on this information alone? We see here that some economists predict the Canadian Central Bank may signal a pause in its anticipated hike next week after the release on Wednesday of GDP data that suggested the economy may be cooling faster than expected. So GDP is something that we mentioned before. It came in at less than what the economists had been predicting. We can see here that the annualized rate was 3.3%, and it was forecasted to come in at 4.4%. So when the Bank of Canada is tightening the interest rate, they're trying to, make money more expensive, harder to get, so that they can cool down the economy with the goal of cooling down inflation. Now, I know I mentioned it before, and it's something we touch on. Inflation did come out lower than expected. So that is definitely the main goal of the Bank of Canada, is to focus on that inflation. But with numbers like GDP showing that, okay, we're slowing down the economy, is this enough evidence for them to start looking at potentially holding off on increasing or dropping that overnight rate? So we'll jump back to this other article here just to get another perspective of what some of the experts are saying. So the Bank of Canada is trying to defend its credibility as an inflation targeter, and that's from Andrew Kelvin, a strategist at TD Securities. Falling short of market expectations would raise uncomfortable questions from around the Bank of Canada's commitment to the inflation target. He still sees 3.75 as too steep, and he thinks that it's going to go to 3.5 in October. So that would be about a 50 basis point increase in September and then another 50 basis point in October. Douglas Porter, a chief economist at BMO, does not see it that way. He sees that it's barreling ahead at its fastest rate, And we're going to probably see a 75 basis point hike and potentially even higher. We'll jump back to Doug Porter at the end of the video to give some fresher insight as to an article that came out relatively recently. So we know the economy is suffering a little bit. We know that the economy is hurting. We know that this tightening may already start having an effect on what is going on. But we're going to look a little bit further into, what another expectation is. So we see here that we should expect more rate hikes. The central bank is determined to bring an end to inflation and rebalance supply and demand. Macklem himself wrote for the National Post here, "We know our job is not done yet, and it won't be done until inflation gets back to the 2% target." We're so far off on where that target should be. At inflation over 7% is, way too high. And it seems like the race to increase the rate will continue. But, everybody's starting to look at it from another perspective to kind of see, hey, is there a potential based on all of this other data coming in from GDP that they may reverse course? Well, these people are not saying that. They're saying that the main focus is inflation. If they focus on anything other than inflation, then it's against what their policy is as a bank, what their rules and regulations are, and what their main goal is. So again, I don't think GDP is too much of a factor. I think we've heard Tiff mention some rhetoric before about the main goal is inflation. If GDP, if housing, if everything else falls off, that's an unfortunate circumstance. He thinks he could have got a soft landing, but the problem still remains is getting inflation back to target. So a recent data point came out just on Friday here, and we got some good news from the housing market, depending on which way you look at it. And that's the fact that the number of sales actually increased 11% in August from the previous month. Now that was in Toronto, but we have Douglas Porter coming back into the equation here, saying that the jump in activity could be a sign the market slide is easing, even amid the rising interest rates and uncertain economic outlook. He goes on to say the Bank of Canada would not be pleased to see the housing market stabilize and even revive anytime soon. So any sign that the most interest rate sector of the economy is holding up surprisingly well will be a clear signal to the Bank of Canada that more tightening may be needed. So he has at the title of the article that it could potentially go up to 4%, if not greater. So we have Douglas Porter, who seems to be a little bit more on the skeptic side. I believe that's the hawkish side, and thinks that the interest rates will go north of 4%. And I think that housing is definitely on its way down. I was surprised to read this data myself. But again, I think this falls into the category of the Bank of Canada is not concerned about housing. The main denominator, the main thing that they are looking at is the inflation rate. So stay tuned for what inflation rates are coming around the corner. That'll give you an indication of just how high we're going. And I think that we are, and we could potentially go north of that 4%. We've talked about it many times before. The last time inflation was greater than 5%, the overnight rate or the Bank of Canada rate had to be equal, if not greater than it, in order to bring inflation down. So having a overnight rate at 4, 5, 6% even is not out of the question. We're not out of the woods yet, especially if that is the main goal of the Bank of Canada. So let me know your thoughts down below. How high could we potentially be at the end of the year, if not potentially Q1 of 2023? Let me know if you potentially see us coming back with the interest rate. Love your comments. Throw them down below. I hope you enjoyed the video. If you're still here with me, hit that like button. I hope you all have a great week in the markets. Happy trading.